I added a new section to the blog post every day. Let me just pull that up real quick. This stuff on the top here. I'm going to start posting. It's not quite a detailed journal as much as my thoughts heading into the day, just so we could all be on full out learning mode every day together. I got an email last night from somebody essentially saying that the trading journal template that we have that comes free with the free membership. They were saying that they didn't feel like it was detailed enough about what to actually put in there because we worded it as a template. So I'm going to. This is basically the a small portion of what would go in a journal. So I'm gonna basically keep a journal every single day. Just some notes of what would normally go in my journal, some stuff I notice, especially something like this. We had mentioned this last week where they were now in confirmed downtrends. They bounced the last couple of days, but they seem to be um, uh, the most obvious sell shorts that have room to go. I guess that's the best way to word it. And like little stuff like this, definitely important stuff to learn in the long run. Because again, I've mentioned this a lot, and it was a mistake I made when I first started trading, where you'd only rely on looking at the indices. You can tell a whole lot more about what's going on in the market by looking at a lot of stocks. Even if you're not trading them, you don't necessarily need to trade that many, but you should at least look up the market leaders to get a feel for what's going on. And one of the best ways to do that is looking it up in FinViz. Actually, because you can scan a whole bunch of stocks at once and get a feel for breakouts, breakdowns, how much room there is to go, if stuff's in consolidations and that kind of stuff. And then the second part here are what I'm just calling interesting chart lessons, and essentially what that means is that it's stuff that you should learn to recognize, even if you're a new trader. You want to be able to start to adjust trade expectations. You want to be able to put together price action as well as volume. Lou and I had just had a discussion about tracking volume. I think it's extremely important. I think you need a baseline number for what a stock normally does, and then some way of tracking, scanning, alerts, whatever you want to call it, to recognize when it does something out of the ordinary. So if a stock, normally does, let's just say for argument's sake, 1 million shares a day, and yesterday it did 3 million shares, no crazy news on it, and it has a trend day. So then you have to put that in the context of where it happened, and that's really where starting. You start to pick out exhaustion, you start to pick out accumulation, all of that kind of stuff. And we discussed well bid and well offered a few times. This to me is one of the most interesting things on charts, well bid and well offered, and you'll start to notice it. And again, well bid means higher highs, higher lows on the daily chart, and how many consecutive days in a row that has. There's it's interesting, like back in the day, prior to all the computerization that we're having now, it would probably be 4, 6 days at the very most on a regular basis, and then you'd pull back, 2 days if it was a strong trend. We have a little bit more of that now because algorithms kick stocks in, and they all jump on the bandwagon. However, regardless of whether it's algorithms or just straight out trading, there's only so many days in a row a stock could normally move. So I'm going to start jotting down when I notice this kind of stuff so that we can all discuss it and learn with each other. So it's I labeled it as something subtle, but it's really not subtle. It's really deeper price action that you need to start to pay attention to. So if you guys don't mind, Lou, I'll get to that once. Richard, I'm sorry. We'll get to Tesla in a second. Something as simple as Boeing on the daily charts here. So you can clearly see here, well offered, multiple days in a row. And then we actually make new lows, have an inside day. We do not move the next day really that much, but we have an explosion in volume. So well offered that many days in a row. Really, really good price move, almost $11. So again, you're putting the context of the price move in over the last week or so in context. And then after a significant move like that, an increase in volume. So you have to be saying to yourself, what would you say that means? After a big move down like that and a big volume day without any price advancement or decline. To me, I'm looking at accumulation there. So accumulation essentially is after a significant move, you get a high volume move and you don't get a move in price action when it happens. Now, it could be one day, or you could notice it a little bit more on the weekly charts over a longer period of time. And it's something that you definitely want to pay attention to. So how does that translate into a trade? I mean, that's really what we want to set up in the game plan meetings. That's the crux of what we want to learn together is how do you set up a high probability trade? And to me, this is not a high probability sell short anymore. You factor in what's gone over the last, let's call it 8 days, most of which was well offered. Almost all, actually, matter of fact, all of them opens and then closed lower up until these last 2 days where you had an inside day and then you had an accumulation day on the spike in volume. I'm coming into the day saying the stocks would do nothing because I don't want to be long the stock, and this price action is telling me something different's going on, so I'm going to let it go. Okay, so I don't care what happens in the stock today. All I know is, to me, it doesn't make sense to look at the stock as a sell short. Do you guys understand that? When you really dig deeper than that, so, and Marion actually had said this in a very much more clear way yesterday. I just wanted to explain it today. There are some stocks that you put in your list and you say, I'm just going to let that go because I don't understand what's going on there. Or actually, one good way to word it is something different is happening that's not a clear chart pattern, so I'm going to stay away. So to get to the other side of trading with consistency, I can't stress this enough. And for those of you that don't know my background, I've been trading for 15 years, but for the majority of those years, I was a proprietary trader, which means that I was trading my own account as well as I was managing hundreds and hundreds of other traders at the same time. The lesson to take from that is traders need first to learn how to reduce their mistakes and then avoid those situations that aren't high probability trades. And then the next step is to learn how to hold good trades longer and understand when the trade expectation is higher. So I can't stress that enough to you. The single greatest value that you will get out of being in the room with us is learning how to reduce those situations where trade expectation is indecisive or lower probability and eliminating those decisions. And then the other side is saying, okay, well, I understand how to minimize those mistakes, for lack of a better way of putting it. And mistakes is probably a strong way to word it, because what we really want to do is we want to minimize low probability situations or situations that aren't perfectly pulled out of our trading plan and our game plan. And then the opposite of that is when things really line up and stocks have room to go, you have to learn how to be a little bit more aggressive. And again, I don't know if you guys have written this down, but I strongly recommend it. Aggressive is 3 things. It's holding trades longer, it's trading more share size, and it's trading multiple positions. So it's a whole other ball of wax from learning how to reduce lower probability situations. It's literally saying these situations are better and there is more lining up here. And I'll give you something just as simple as, we will talk about the SPY, and you'll hear me talk about the general market a lot. There's a reason for that. Trades are better when your stocks are trading in sync with the market and they're both doing something. So if you have the Dow, the Dow up 150, 200, the SPY's, up $2 or whatnot, and trending, where you're getting intraday consolidation patterns and you're moving and there's room to go and that kind of stuff, it's a better day to trade. Now, even if you don't, quote unquote, get aggressive with more positions and more share size, you absolutely need to learn how to hold longer. And I know I facetiously joked around a little bit about on either Friday or Monday, I don't remember at this point, where sometimes your profit target is 4 o'clock. That's only a half joke, because when you have good situations and it's clear there's institutional order flow in that stock for that particular day, where the higher time frames are in sync with the lower time frames, you're trading above the open, you're trading above yesterday's high, you're trading above yesterday's, all of those kind of things. You must discipline yourself and force yourself to make what you're supposed to when there's money on the table. And you literally need a checklist to go through all of those things. Well, the VIX is downtrending, the trend is downtrending, the ticks are pushing up 800 to 1,000 with consistency. 5 of the stocks in this sector are all above the open. They're all trading at or near the highs at 2 o'clock in the afternoon. If there's more to be had out of this trade, the right thing to do is to squeeze it. And, and again, relatively speaking, aggressive could if you want to trade more positions, if you want to trade more share size, that's fine. But ultimately, you have to learn how to have that checklist to get to the point where you understand when to hold the good ones, and also when to book profits into momentum as opposed to building and holding. And we haven't used the market internals yet. Marion and I had spoken about that a couple of times. We will get into that. We will get into understanding how to use the ticks, and depending on what your software, your charting software is, or your execution provider, it's TICKS. Some of them have a $, some of them have a dot in front of it, but either way, the levels to watch are plus 500 or plus 1,000. And if you can't get past plus 500 with any kind of consistency, that is literally telling you that you should not be adding to positions. It's literally telling you that you should not be looking for longer pulls. Now, if you have a stock that's got good volume and clean intraday consolidations, fine. That's a stock-specific moment. What I'm talking more about is setting up global perspectives for you to have guidelines to say, bam, everything's lining up, and I should, quote unquote, learn, be squeezing a little bit more today because there's more on the table. Learning to recognize that and having a little checklist, which, by the way, when you're doing all these things and you're starting to add other stuff, you're starting to add, let's say, the ticks and the trend and the VIX and scanning change from the open, scanning stocks in multiple sectors, that kind of, not multiple multiple stocks in the same industry, the same sector. All of those things become, they literally become a checklist that you have like on a Post-it pad all around your monitor, which is common. If you're a new trader, and again, I define new trader or inexperienced as somebody who's still finding a way for themselves to make money. So I don't care if you're trading for 5 years. If you're not making money with consistency yet, nothing wrong with that. You're in the right place. We all want to learn together. But new trader is somebody who's not nailing a strategy yet and getting to the other side. So I'll give you, for my example, I have no problem talking about how I lost money and what my own career was. You always have Post-it pads all around your monitor. It kind of looks like you decorated your monitor with Post-it pads. You take one down. All right, I understand how to watch the VIX now intraday. I understand how to watch the trend. The ticks are a little bit harder. I need to keep that. As you start to internalize all of these things, the market internals, individual stocks, room to go, higher time frames coinciding with shorter time frames, they all start to become a mental checklist, and you really start to feel, I'm in control of what I'm doing with my trading. I'm not guessing anymore, or I'm not just looking for a feeling. And guessing is a strong word there, so don't go crazy on that. When I say guessing, I mean you don't have that framework to say everything is lining up. Like if you guys scroll down, you see some of the comments that Lou had put in there a little while ago. He was clear about what he was looking for. That's what you want to get to. You want to get to the point where it doesn't matter what's going to happen next. What matters most is you have a structure for what you're looking for, and you trust yourself to follow your plan. That's the most important thing. I can't stress that enough. Your consistency to make money will come from understanding what you are planning to do and then actually doing it. Confidence and conviction in the market come from within yourself, following your plan that you laid out for yourself. And I will tell you, beyond a shadow of a doubt, not even a question, most traders struggle because they can't make a commitment to a strategy. The more we work together, the more time we spend together, you will see that consistency comes from attacking the market in a structured way every day. And it could be anything. It could be something as simple as just using the last 5 candles. I'm not even saying it doesn't even need to be more than that. It just needs to be consistent. So you could we've already discussed this morning, well bid and well offered, right? So you could go into the day saying, well, you know what? Yesterday and the day before is well bid. That's my entire universe. Since I'm day trading, I'm only looking for stocks to bid. So the next day you'd just be looking for spots to buy. The opposite would be, if you get well offered, you just that's all I'm looking at. Another way of looking at it, you could say, well, the 20 is above the 50. To me, that means I'm only looking for longs. That could be all you're looking at. You could say, well, I'm looking at the weekly chart, and this week is green. Just that one candle. That's all you care about. This week is green. I am doing nothing but looking for longs. Do you understand how the power of that takes all the indecision out of your trading? You stop hesitating. You stop asking other people what they're looking for. You go into the market every day saying, I know exactly what I'm looking for. I am planning to do this today, and everything else is off the table. That's where trading confidence and conviction comes from. And if I pass along anything to everybody who's a part of this room. I will beat that into the ground until you believe me, because I've seen it over 15 years in my own trading. I've seen it with all of the other traders that I've managed. And I will tell you flat out, the single biggest thing people need to learn is to make a commitment to a strategy. It could be whatever. And we'll work together on a strategy. You guys want to send me emails? Maybe we'll schedule a meeting midday, that kind of thing, where we'll discuss it, and we'll discuss the validity of an edge and that kind of thing. Absolutely. Absolutely, because look, when we're all making money together, we're going to be digital high-fiving each other. And, I'll just type in the digital high-five in here just to give everybody the official, how we celebrate together. That's a digital high five. You use zeros and the forward slash, backslash there. We want to be high fiving each other, but we want to high five each other, not so much because of the dollar amount of the results. I can't stress that, because everybody in the room is coming to the room with to the meetings with different backgrounds, different experience, different risk tolerance. I would much prefer we focus in the room on, here's the execution plan that I had, here is how I followed it, and I'm really proud of myself for following it. That is the single biggest thing we want to get out of the room. Because, look, the bottom line, we don't want to intimidate somebody else who's in the room to learn. We want, you could have just made $4 in Netflix or, whatever. And somebody else could have just made 65 cents in whatever, it doesn't, and GE. It doesn't matter the dollar amount that you made. What matters is we're working on forming for you personally a plan that you could attack the market with every day with conviction. Think about it. Imagine it. Imagine every single day going in saying, I expect to make money. How would you feel about that? That's the way you want to get to. You want to get to the point where it doesn't matter what happens. The only thing that matters is you had structure for price action. You knew exactly what you were going to do. You know exactly what has to happen for you to size up, scale back, do nothing, or be aggressive. That's where trading confidence comes from, and that's where you want to get to the point where you're running a trading business saying, I know exactly what I'm doing, and I feel awesome about being a trader because I am in control of what I'm looking at. And that comes from a trading plan and translating that trading plan into a game plan. So your game plan is nothing more than looking for your strategy. Which stocks meet my strategy? Which stocks have sufficient risk reward scenarios, and which stocks have a more aggressive or less aggressive scenario today. And then the market opens, and now all you're scanning for is which stocks are positive or negative from the open that match my bias coming into the day. And then you glance over and you say, oh, what's the market doing today? Okay, the market's flat today. Okay, so I'm a little bit more stock specific, so maybe I won't be a little bit more aggressive unless I see very, very clear continuation patterns today. Then you glance over, and again, I'll just keep you. Well, actually, no, Lou, you said the financials before. So we'll say we'll look at. I have in my list today, I have Schwab, E-Trade, JP Morgan, not Morgan Stanley, and maybe we'll get into that in a minute, and my old nemesis, Goldman Sachs. So now I know coming into the day, all right, actually, I'm sorry, let me pull them up. They're all starting to have these higher flags that have held above resistance. And if you guys can see me right now, I'm actually using all my hand movements. It's kind of funny, actually. You're now sitting at your screen during the day and you're saying, okay, I like the financials today. I don't like the retail stocks. So what in my mind would make me feel really comfortable being in these positions where, jokingly but not jokingly, my profit target would be 3:50 p.m. in the afternoon, 10 minutes before the market closes. I don't want to necessarily hold to the last tick, but what would have to happen? So when you're doing all of these things, and I don't know if you guys have ever played baseball or softball or whatnot, you're looking to set it up so that you can anticipate what's going to happen next. And the reason I say baseball is, if you're a casual observer of baseball, it could be boring as hell. I'm sorry for cursing. It could be boring as anything. But if you really know what's going on, you're watching that it's the pitcher setting up the hitter. And I'll give you a perfect example, and this is very relevant to the market. When you're a hitter, you're trying to get a count where you can anticipate a fastball coming so that you can swing from the heels and blast the thing to kingdom come. When you're a pitcher, you're trying to set up a count where there's two strikes or put the hitter in a deficit where he has no idea what's coming, and then you don't even throw him a strike. You try to get him to swing at a pitch that's not even a strike so he can't get the fat part of the bat on the ball. Trading is the same exact thing. You want to stay away from the bad counts where you're not sure what's coming next, and you want to load up or again, relative to the definition I gave before, you want to be aggressive with when you know the count is in your favor. So in your mind, you want to scale down your checklist. And again, it could be literally a checklist that you have laminated on your desk. It could be Post-it pads all over your monitor. Again, that's what I used to do, Post-it pads everywhere. You run down the list. Okay, I'm long these stocks. The market's neutral. The ticks are going down. The VIX is going higher. There's no announcements coming out. All of those kind of things. And then you start to get a weighting of weighting, WEIGHT, where there's a scale of probability. And, initially it'll be like, all right, well, 8 out of 10 things are pointing in my direction today. And again, I'll just run them down quick. We're above yesterday's high. We're above yesterday's close. We're above today's open. 4 out of 5 stocks in the sectors are doing well. We're getting continuation patterns in the market. The market's above there. Market's above previous resistance. All of those add up to be like, wow, everything's lining up today. Let's dig in. Let's not go for a coffee. Let's sit here and let's let things unfold. Does this? I know I'm hitting you with a lot, but I'm so passionate about you guys learning from the stuff that I experienced, so that you minimize those mistakes and get to the point where you feel in control of what you're doing. I can't stress that enough. That is, and I know I'm speaking for Marion as well, that is the goal of us setting this stuff up during the day. It's going into the market knowing exactly what you're going to do, and then as the market unfolds, you have a solid grip, anticipating what you need to see to either exit in momentum, meaning get out into a pause instead of adding to a position, do nothing, or have those aggressive, profit targets because you fully expect them to be reached. And I feel like that had to be a huge part of everything that we do every single day, because I want you to have context of what your goals should be. One of the most frustrating things in trading is you come into the day and there's so much information. Especially today, you could Google anything and be up till 4 o'clock in the morning reading charts. You don't need to do that. You just need to first start out running a business that you understand, and that is the big thing. It is, every single thing has to be built around what you understand. And again, I don't want to, this is not about, personal resources and whatnot, but you need to open a business that you can afford to run. It's very, very difficult to try to run a trading business with every single signal, every single strategy. And again, my background, I was in food service for years, back in the day with my family. Imagine trying to open a deli, a pizzeria, a taco stand, a burger stand, a Walmart. You can't do all of them at the same time. Run a business that you're comfortable, and then expand to a second strategy. Develop a strategy that makes sense for you, whatever it is. Pick one strategy, and I'm going to give you real world numbers. And I don't know how many of you know me from when I was at T3 and whatnot. I eventually wrote another course while I was there, which, let me actually write the name of the book. And again, I stress this. I'm not telling anybody to spend money. I'm just going to pass along resources that I have felt were very, very valuable. So I'm going to write the name of the book in here, and I'm going to give you a little, this is a very relevant story. Taylor Trading Technique. It is actually a book. You can definitely find it on Amazon. It might take like a week or so to get, or maybe Traders Library, one of those. I think Traders Library, Traders Press actually is where I bought it. It was written in the excuse me, I'm sorry. It was written in the 1950s by a grain trader, and essentially his entire world was over like the last 3 to 5 days worth of trading. And he had this very, very specific scenario of how many days in a row did corn just move, or soybeans or whatnot, and then what did it do the next day, and that kind of thing. So that's not the point. The point is, I had taken this book and then pulled all of the stuff out of the book and created a new strategy. And that was the only strategy that I traded for a long time. But here's the 2 things that I want to get across to you. Okay. Number 1 was, when I would scan for nothing but that strategy at night. It would literally take me 25 minutes, because that's all I was looking for. I was looking for stocks that closed very strong or closed very weak relative to the open. And then I would look for what the stock was doing over the last 3 to 5 days. So very similar to, like this kind of thing. Okay. And this move here in Goldman Sachs is actually the trade setup. Maybe we'll do a meeting on that one day, but again, that's not the point. I'm getting in depth here because I can't stress. I want you to have context to the lesson that I'm giving. I was trading for 13 years when I started to trade this strategy, and I called it the saturation play strategy because essentially stock would move higher or lower 3 to 5 days in a row, and price action would saturate at a certain point where it just wasn't a high probability trade in that direction anymore. But then the strategy takes it a step further where it says, okay, not only am I not going to trade in that direction, but if specific price action happens on the open tomorrow, I'm actually going to make this type of trade. So here's the point that I want to make. Number one was, after all of those years of trading, when I started to trade this new strategy, I was literally trading it with 100 shares. Literally. For the first 3 months I was trading, with all of that experience I had, all that buying power I had, I said, paper trading this means squat. It means absolutely nothing. You need to get in there and say, does this work with real money, and can I follow it? And does it work over a lot of trades? Because you don't want to say, oh, one trade, it doesn't work. That's BS. You need a bunch of trades. That's where great trading comes from. Great trading comes from, over time it works, but trade by trade, you're judging how flawlessly you can execute it. So over a 3-month period, I traded 100. Maybe I went up to 200 or 300 shares, but I was proving it worked over time, and I was proving I could follow it on a trade-by-trade basis. It got to the point where that was the only thing I was trading, and this is the whole point about this is strategy, not what I did. So don't take that. Please, I don't brag about anything. I'm more concerned about helping everybody. But the point is, I want you to use this as inspiration. I literally had days where I would make money 20 days in a row. And I trust me when I say this, I'm online. This is recorded. FTC. I'm not kidding you. Now, here's the point. The point was, I didn't care about anything else that happened in the market at all. I only cared about the business I was running. So close your eyes and imagine you just rented a store down the block from your house, and you have to pay the rent now. You have real rent. You got inventory. You got your mortgage. You got employees and all those things. You can't run 20 different businesses underneath that store. So you have to pick a business. So that's what I did. I picked that business was my strategy, and that was how I was going to attack the market. So you need to do the same thing relative to your risk tolerance, relative to your capital, relative to your experience, relative to what you also need to learn, also relative to what you believe works. Now here's, to me, like the ending of this, like a crescendo of the story. There were periods when I was really, really consistent, as I just said, but here's where you really believe you got something special for yourself personally. Now think about this. If you have just recently earned money, and let's use a real number for somebody who has a strategy they fully believe in. Let's say you just made money 12 out of 14 days in a row. And when I say made money, you were in total control of what you were doing. Total control, okay? Now, the next 3 days, you don't make money. What are your thoughts at that point? And I literally went through this. Even after all that, I'm like, well, you know something? I'm not doing anything different where I just made money all those days in a row. So this is just the probabilities playing themselves out for these 3 days. I can't abandon the strategy, and I can't tweak the strategy because it works. It made me money, and I believe in it. So these game plan meetings are translating your strategy, and we'll discuss all the strategies and whatnot that you guys have, and we'll go back and forth about what an edge represents and how to increase that edge and that kind of thing. That's the point of the game plan meetings, is getting to the point where you are flawlessly scanning for stocks that match your strategy, only game planning those stocks, and then knowing exactly what you're going to do during the day, which is why I personally, and I can't stress this enough, you need to plan the open. Don't be afraid of the open. I'm not saying jump in when the bell rings, but you need to come into the day saying, it closed like this yesterday. Exactly, Joan. Stock closed like this yesterday. It did certain things so many days in a row. Lou, I couldn't word it better. Exactly. Random distribution of wins and losses. Probably the best book, and Lou, I'm sure you've read this, and I'm sure everybody else. The book's by Mark Douglas. Mark Douglas and Van Tharp is a little bit more complicated. I would say Mark Douglas's books are a little easier to understand and actually apply. But you need to judge your results over time, but you need to judge your execution trade by trade. And unfortunately, so many traders who struggle do the opposite. They judge every single trade by the results, which drives you bananas. You're like, oh, that trade worked. I didn't make money on the last trade. Maybe the strategy's broke. It's not broke. It's exactly what Lou just wrote. It's a random distribution of wins and losses. So when I went through that period where I had a few days in a row where I didn't make money, I literally went to Starbucks downstairs and I said, well, look, I'm big with notes and dating my notes and all that kind of stuff, and I highly recommend you do the same thing. I remember sitting outside and I'm like, well, I can't abandon the strategy. It works. This is the probabilities playing themselves out. And the whole point of this story is when you believe in your edge because it's proven itself and you continue to trade it after a few losses, that's when you know you have something special. And that's what we want to accomplish together. I can't stress that enough, how excited I am going to be for you when you can get to the point where you say, I know exactly what I'm looking for. This is the most empowering feeling in the market. It doesn't matter what happens next. The only thing matters is, do I trust myself to follow my plan? And that's where we all want to get together. That is exciting. And that's also, to put it out there, that's why we need screen time together, meaning that's why we need these meetings over time. One day, 2 days in the meetings, that's not going to do anything for any of us. We need to have these conversations. And today you'll write something down. Maybe tomorrow nothing will click for you. But then maybe the day after that, it'll be like, wow, there's 5 things I took out of the meeting today. And again, today I think there was a lot. I mean, I didn't plan on this being the thing, but this is the beauty of things. The whole point of these meetings are for us to learn from each other. But again, you guys don't know me that much yet. I hope that we become friends and we work together for a while. I'm not saying any of these stuff to tell you what I've done. I'm saying these things to tell you what I've done so you could learn from my experience. And I truly hope that you see that over time. I will get more excited about your success and your struggles and how you overcome those struggles, because let's face it, there's going to be adversity in trading. Yeah, I mean, anybody who tells you it's stress-free, they've never traded one real share before, ever. So if you know me, I'm a huge student of Napoleon Hill. If you see it properly, every adversity contains the seed of something greater. Actually, he said the seed of a greater benefit. But the point is, to put it into easy terms, learn from everything. Don't see it as a mistake. See it as you need to change and maybe do it differently the next time. See it as something that don't say it worked or didn't work. Just put it in your journal and say, did I follow my plan? If you followed your plan over time, that's where the money ultimately comes from. So I can't stress enough, the more we're working together, you will literally day by day, I'm not even going to say imagine it, you will literally day by day feel your confidence increasing because you know what you're doing and it's a business that makes sense for you. So don't be afraid to leave everything on the market off the table other than your strategy. The whole point of me trading that one strategy with 100 to 300 shares for 3 months, it was a story about how to commit to a strategy and what it takes to do it with real money. And when you can do that, you're going to say, this is the kind of business I run. And that is where that's where your trading really becomes a business, as opposed to trying to figure it out every day. There is nothing that will drive you more bananas than saying, when am I going to get it? When am I going to, how many people, I'm sure we all do it. You keep a journal. You're like, I'm working so hard. When is it finally going to click? I deserve it. that kind of thing. It comes when you commit. The sooner you make a commitment to a strategy and give it a chance, that's when you're going to start to see some exciting results. And, we'll be doing, type it in. So we all get, comfortable with it. We all, we want to get to the point where we come into the meeting the next day and we say, I followed my rules, high five. Had my strategy, my game plan unfolded. I was prepared for it. And then as the day unfolded, I knew what I needed to see in order to feel more aggressive, less aggressive, and more comfortable in my positions. And when we get to that point together, man, it's going to be really exciting to keep passing the help along to each other. And that's really what that's what I'm all about. Maybe that was a rant on how bad I want to help everybody, but that's why I do this. You often go, oh, if you're such a great trader, why are you doing this? Because I've gone through all this. And first of all, there's nothing wrong with running 2 businesses if they're both successful. But when you've gone through it, you really, really want to give back, because it's look. I mean, let's face it. If you have the ability to help somebody else reduce their stress and really learn what to do because you went through it, and you see that other person is working hard, that's a prerequisite. That other person has to be working hard. You love to give back, and like Lou and I have had a lot of conversations, both on the blog and whatnot. They're spirited conversations about how to improve as a trader, and that's the whole point of what we all want to get across. And again, though, I can't stress it enough. If you prefer to remain in the background and want to send emails and have the conversations, I have absolutely no problem with that, because I understand some people just would prefer not to put it in the room. I'm 100% okay with that. However, I will demand, for lack of a better way of putting it, I will demand that you take good notes, because there's a lot that goes on. And also, one other thing, you're not going to learn something the first time you hear it. You have to read it once, write it down twice, look for it, listen to it again, write it down again. It's the single biggest thing I wish I would have learned when I was in school, that you're not supposed to learn something the first time you read it. You pick up a textbook and you're like, oh, yeah, I'm supposed to learn everything about the Sioux Indians. Yeah, no, I'm like, I don't understand. Why don't I get it? Because you have to first familiarize yourself with it, and then ultimately get to the point where you understand it. So it's first getting comfortable with it, and then getting to the point where you understand it, and then you understand how to apply it. Okay, so I can't stress that enough. Let's learn together. Some of us will type it into the room, and some of us will do it in emails. Either way is perfect, as long as you make a diligent attempt to really learn how to improve your trading. So we kind of had a lesson there as opposed to a game plan meeting, but I really feel so strongly about us learning together and minimizing mistakes and what it takes and that kind of stuff. It's so important to the long-term health of us working together. It's amazingly important. So I guess what I want to do is, if anybody has any stocks they want to talk about first, we'll go over those. I'm going to go into the spiders very quickly. Again, reading into price action, we keep getting rejected at 212. So essentially 212 is the level, and literally got up there within a couple of cents yesterday, and we got pulled back. So that's really the real number. So what does that do with the trade expectation? Trade expectation means, from a market bias perspective, yes, we have two well-bid candles in a row. Higher highs, higher lows over here, higher highs and higher lows over here. So two well-bid candles into resistance. So last 3 days, absolute institutional support, especially after this down day where we completely reversed it. However, I'm not going to add the little extra juice into my trade expectation of aggressiveness using the market until we can clear 212 and stay above that level, if we do. Okay, so that's setting the expectation tone for the market. Now, if you are 100% day trading, you can still look at the market and say, well, we're trading above the open the entire day. So even though we're not taking out 212, we might be trading above the open. So that still represents intraday institutional order flow. It's just not longer term new bias being formed, which is obviously the 212 level. So do you see how you might, kind of have like a little wave of intraday institutional order flow versus whether or not it's in sync with the daily, weekly, or longer term time frame? And again, that's a checklist. You start to say, okay, well, I only have today, so I can still hold my longs, but I just might not get aggressive. Do you see how that translates into trade management? And that's really where it all comes from. There's trading plan, trading game plan, and then trade management. And when you filter it all the way down to trade management, it's those checklists posted page you have all around your monitor that help you really get to the point where you're monitoring that stuff. So as far as setting up some trades today, we do have earnings in Tesla tomorrow. I believe, did somebody say there was an upgrade in Tesla? I apologize. I'm just going to go back a second here. Tesla upgrade. Richard typed that in. Thank you, Richard. So technically, Tesla's still looking very good. We have a nice flag above what was a resistance level. I still like it. Again, your game plan has to determine whether or not you're going to trade a stock into earnings. Now, again, whether it's options, whether it's straight out stocks, completely up to you, but I can't stress this enough. You need to make a decision. I trade earnings or I don't. And if you do, you need to be very specific about what that means. If you don't, not a big deal. Just go look for something else to trade. Excuse me one second. I got the cough. Okay, so let's take a look at these. HZNP by Scott. Let's see. Average volume looks good. This is a pretty clean setup. I like this one. Well bid coming off of an inside candle. So we have an inside candle on Friday. Friday to Monday is well bid. You guys will definitely start to notice well bid to well offered and how that factors into your trade expectation. I like this one. I like this one a lot. It looks like obviously the 32 level. So you could trade this long, looking for long for continuation patterns, changes from the open between here and 32. Good call there, Scott. I like that one. RCL, I actually had that on my list as well. Look at how different this RCL is compared to the Boeing trade. Boeing had a similar chart. It didn't have a gap down as big as this one, but had a similar chart with a lot of well bid and red candles. But look at the volume difference. We do not see a explosion in volume after the significant move. So what does that tell us? That implies to us we are not seeing something different in the price action volume equation, for lack of a better way of putting it. So that means we can anticipate follow through to the downside. So the only other question then would be to look to see, does it have room to go? And yes, this does. This is a really good scenario there, Scott. I like that one. CRM I have in my list. It actually broke out. Pretty good earnings a couple of days. Intraday, Thursday, Friday, a lot of indecision. This is still holding above the breakout level from 70. I like this one long as well. Regardless of the fact that it's well offered right now, I still like it long. Good volume breakout. Look at this here. Look at how clean that is. Decreasing volume after a breakout. That is technically about as perfect as you could want to see on a trade. Pausing, flagging, consolidation, whatever terminology you want to use for it, that looks pretty good there. So I like CRM long as well. Now, Ken, let's actually map out a game plan in CRM. We have yesterday and Thursday as 71 support. So coming into the day, we want to be long for all the reasons we just mentioned. And we also know that 2 out of the last 3 days have found support at 71. So you would go into the day saying the best case scenario would be a spot that has profit potential as well as a trade area where you can manage risk, which in this case would be 71. So you would not actually mind a flat opening that pushes lower into 71, shows intraday support at 71. So where maybe you would have what I call well bid or a swing low, which is you see this here on the daily where there's a low and higher lows on each side. So again, let's say for argument's sake, it opens flat, pushes lower, and then on the 15-minute candle or the 5-minute candle, you get well bid, which is showing short-term support. So you have short-term support with longer-term support in the direction of a higher opening, in the direction of a longer-term order flow. So that's how you game plan the open. If it opens higher, you let it push higher off the open, and then you look for a consolidation pattern to enter. So now you have 2 different completely game plan scenarios for whether it's a higher open or a lower opening in the direction of the bias that you want to trade in the first place. And those are the kind of opening scenarios that we want to learn how to, I'm using my hands again, that we want to learn how to work on together. Okay, so I like that one as well. My trade of the day today that I like is Wynn. And this, you can kind of see why. Clear support that we broke through at 125, pushed obviously big gap down. This was an earnings play. And now 3-day bounce against a weak stock and strong close. So well bid is relative to the longer term picture here. So I am looking for the opposite of that today, Ken. I like the stock short. So if we open flat and push higher, especially if we're anywhere near this resistance, which might actually even happen tomorrow, but if we open flat, push higher, and then show resistance or some kind of a topping pattern, I'd be looking for this to come down. But the key here is not so much the opening pattern. I would say that's probably 35% of it. The real key is this, the fact that it's in this much, much longer selling order flow. Okay, and I'm going to draw multiple lines here because the trend actually changed at a certain point and it got a little bit more steep. So it's really the strategy and the edge first, and then you set it up technically here. Okay. What else? Anybody have anything else interesting? If you want, you can type it in. ADM is a good example today as well. Is it a long? Yes. Is it a long today? No. We have 1, 2, 3, 4, 5, 6, 7, 8 well bid candles in a row. That is tough to maintain that many days in a row with extra buying pressure. So how do you trade that? Well, if you open flat, you can definitely look for a long. If you open higher, it's most likely exhaustion of this recent 9-day move in a row. So you see how now you're adding, I want to be long, but the last 8 days in a row have a lot of institutional pressure where it's held higher lows, held higher, pushed to new higher highs. If we open higher this morning, it's probably not a high percentage long. Again, adding trade expectation to the open in sync with your longer term time frames. This is really where you start to gain power in your trading. And I say power, I'm not talking about like pounding your chest. I'm talking about you have conviction because you have confidence in what you're doing. And that is really where we want to get to as traders. You want to feel like I am running a business that I understand how to run. And that's where we want to get together. And that's when trading becomes, yeah, I got it. I belong in the market because I know what I'm doing. I know that sounds Pollyanna, but it's really not. That's the way I think all the time. It's constantly, how can I get better tomorrow than I was today? And that's definitely something that you're going to hear from me quite a bit. Actually, I just want to. I'm going to come back to HRB because it's a perfect trade for what we just talked about. But Marion had talked about BABA through 80 today. I don't have the pre-market in front of me right now, but I'm pretty sure it's below this. So we want to keep an eye on BABA now, long term. Broke through here, so that's definitely one to keep on the list. But I want to get back to H&R Block, and again, I'm going to reiterate this every single day. We had, look at, again, just now that you've noticed it, how many well-offered days in a row, bounce back, resistance on the breakdown, a test of the previous day's high. So essentially, what am I looking to set up here? Okay. Want to be short, whether it's on the weekly or whether it's just using the 20 and the 50. And again, just to give context, it's 20 exponential because I like that to move faster with the most recent price action. But 50 is simple because I'm only using that for a longer term trend. Okay. What I did here was I wanted to be short for both of those reasons. Strong close in a weak stock. That's the setup I want to get across here. Okay. So this stock heading into yesterday, and we talked about this in yesterday's meeting, looking for a test of the previous day's high to look for a sell short. Not only did we have a test of the previous day's high, maybe this is off just a little bit, but you can clearly see that we were at or near the level that we broke down from. So think about the power of setting these trades up heading into the next day. Weak on the moving averages, weak on well offered, inside candle leading to a 1, 2, 3, 4 well offered days in a row. Get a really solid bounce back. Now, we want to be short, strong close, looking for a test of the previous day's high. We immediately get it within the first 15 minutes, and then we get a trend day down to the downside. All set up based on longer time frames, shorter time frames, heading into what you expect for the day. Yum, yep, Ken, absolutely. That was on my list today as well. I like Yum long. So what would the trade in Yum be? We had a really good gap, push higher, inside candle leading to a trend, a flag leading to a trend. We got rejected up at 94. So the conservative trade today would be one of two things: trading a test of yesterday's low as support. However, if the stock, let me just pull this out a little bit here. How do I do that? Let's say, for argument's sake, the stock opens here and pushes down. Well, we would look for a push down, maybe look for a swing low to get long, or the more conservative play would be waiting for a reversal to wait for it to get through yesterday's low as well as being above the open. So I like Yum long. Lower opening after a really, really big trend day after it got rejected from 94. I would anticipate a lower open. Look for a support intraday and then look for it to be above the open with yesterday's low as the first level. That would be significant. I do like low. I have Lowe's, Home Depot, Kohl's, Target, all of those stocks looking for a sell short. So again, you can see how clearly this is now. It became a confirmed change of trend here when we paused, not because of the moving average crossing over, but because we had 5 or 6 days now closing below that. We get a nice push down, couple of day rally. Actually, you know what? This is a good example here of 1, 2, 3 well-offered days in a row. Coming off of that. Now, coming into this day, after this many days in a row, think about what I just said this morning multiple times. What would the odds be of making money on a lower opening after basically 4 selling days in a row? It starts to diminish. So you come into the day saying, yes, I probably want to be short this stock, but I don't want to be short a lower opening because it's probably capitulation or saturation or exhaustion, whatever word you want to use, of the last 4 days selling pressure. So we had well offered, and a lower opening. So you come into the day saying, nope, not only do I not want to sell short a lower opening, maybe a flat opening and a push lower, two different scenarios, but we got a much lower opening. And let's factor in change from the open. So let's say, yes, I want to be short lows today if I find some weakness, but look how it trades the entire day. The rest of the day, it trades above the open. So what did we just say before about managing your expectations on trade versus the open versus your longer term picture? The entire day, trade from the open was positive. So you're not looking for any shorts because the stock intraday has buying. Now it's different. Ken called it out today. We have 2 days of buying, a higher opening into resistance. Now, again, we're only using moving averages as anticipated levels. If we open flat or open higher and push higher, then we'd be looking to reestablish this downtrend with the ultimate target being down here and maybe a 2-day trade to the downside. Okay? Excuse me, I had to cough there for a second. Yeah, Ken, so the more specific we get with how we look for certain things, two things actually happen. It becomes obvious when you know what you're looking for, but to me, the screaming difference is when it's hard to find. That means it's not there. And that means, wow, I should not be allocating capital because I just can't find anything. Or maybe less opportunities. So that is a giant part of us working together. Developing trading strategies, translating those trading strategies into scans, setting up game plans for the day, not only for a bias, meaning do I want to be long or short, but then ultimately creating an opening scenario and then translating how we manage, trades after the market opens and what we need to see with all of those things in the checklist of what would make us want to be long or short less aggressively or more aggressively. And I just want to, I'm going to end the meeting if you guys don't mind, because I don't want to take you too close into 9 o'clock so you can prepare. But less aggressively means if I want to be in a trade, meaning I like the idea, but a lot of the different parts of the checklist are not lining up, but I do like the stock. Let's just say for argument's sake, this is a 15-minute chart. Again, just for argument's sake. So let's say for argument's sake, we get one 15-minute candle, 2, 3, 4, but the day's expectation is lower. So let's just say for argument's sake, Lowe's is trading down on a 15-minute chart. So these 4 15-minute candles would be an hour. But let's say Home Depot is trading higher today and the market is strong to definitely trading above the open. So Home Depot is strong. The market is not weak, but Lowe's just had a nice 1 hour run to the downside on the 15-minute chart. My trade expectation in this case would be more inclined to trail a stop loss as opposed to looking to add to the position because the other factors that make me want to be aggressive or less aggressive are not lined up. So in this case, it would be less aggressive because of those other two factors. I would be more inclined to trail a stop or exit into momentum, meaning this well-offered move for an hour as opposed to looking for it to flag and then add to it. So that's how you also adjust your trade expectation during the day. And as we talk about this over and over and over again, you will absolutely, as Ken worded it, you start to see it over and over again. And you'll literally be sitting at your desk. All right, I'm short Lowe's. What's Home Depot doing? What's the market doing? Maybe what is Toll Brothers, Lennar? What are those guys doing? And they're actually weak today too. So I wrote that in the notes today. We're actually looking at some of these starting to roll over as well. So we're seeing Toll roll over. We're seeing Home Depot roll over. We're seeing Lowe's roll over. We're seeing Lennar. I don't know if it was as strong as this one. Okay, similar. So now you start to add all of those things together. Actually, Richard, we have not. Let me take a look at that one. We actually have this on the list as well. The thing about Twitter, here's two things. Number one, we've been talking about this $36 support for a while, going back to 2014, end of 14, earlier in the year, and now pushing down. Now, granted, this was on earnings. $36 is the target. And we have an inside candle yesterday. So we are absolutely looking for follow-through to the downside, a trend day outside of this inside candle with a profit target of 36. So you have a very defined upside profit potential, but a clean, longer-term bias to want to be short and a really nice inside candle yesterday, leading us to anticipate a trend day today. So excellent call, Richard, there for us to end the meeting on a stock that has a very specific setup. And actually, I want to put, if you don't mind, I'm just going to put it in context. The setup in Twitter today Very similar to what we've had in AXP, that AXP did not follow through. We have a very, very specific setup in TWTR today. If it follows through, and let's put in context what follow through means. That means intraday continuation patterns. So you get a push in that direction, and then either an inside candle or a flag, depending on what time frame you're looking at. If you get those patterns, you have every reason in the world to hold the trade. If you start to get closer to 36, then you probably want to lower your trailing stop loss to lock in some profits, because there's really no reason to scale out at that point. You see there's a massive, massive, obvious support level there. Could it go through there? Absolutely. Will it likely go through there? Well, it hasn't. That's what we have to go by, right? All right, so Toll Brothers, yep, Toll does look ugly, and it actually has room to go. So if you're just drawing an old school trend line here, which obviously I love to do, looks like right around 35. So relatively speaking, 70, depending on where it opens. Again, you got about 75 cents to the next support level, maybe a little bit lower than that. So if anybody would like to stick around for another 5 minutes, I will be more than happy if you want to type anything in. If not, we can call it the official end of this morning's meeting. I think what I will do, we had some good stuff pop out of today. What do you guys think? I'm going to pull the audio out of today's, let's call it lesson / rant. And I'm going to make it into a podcast so that we all have it to be able to listen to over and over again. Because again, in my opinion, you listen to it once, you listen to it twice, you write it out. That's when you really start to understand it. That's the best way to learn, in my opinion. So look for today's audio to be pulled out and turned into a podcast today, and I'll send out an email to everybody later. Okay? All right, everybody. Have an awesome day today. Be disciplined. Have your bias for the day set up. Keep an eye on that 212 level in the spiders and know what you want to be long or short. Have your expectations and know exactly what you should be doing, whether or not holding positions, exiting to momentum, and what other factors you need to put in there to make you say, I love this, I want to hold it, versus any kind of momentum move, I want to exit and book my profits or trail it. All right, so let's have an awesome day today. Anybody has any questions, please shoot me an email, info@tradingeducationblogs.com. And we will absolutely pick it up again in the morning. Ken, free real-time quotes, you can literally use the one that I have up on the screen here. Freestockcharts.com is actually real. It's real quotes, and they're free. So, all right. Have an awesome day, everybody. I will speak to you tomorrow. Thanks again.